Top 10 mistakes to avoid while investing in 2022. So this is again a very unique video which I am making. I am not making the usual stock analysis video this time. I thought it is important for us to understand what should be our approach while investing in this year. And this year the things are going to be different when compared to the other 2 years which went by. Things will be more difficult to understand. The market will not give us easy money. So how should we our approach towards investing? How should we manage our risks and minimize the losses? How should we protect our gains which we have earned over the last couple of years? How should we protect our capital? So these kind of things we'll try to understand in this video. Whatever we discuss, if you keep a note of these things and keep these things in mind while investing in this year, I'm sure you'll be able to take a lot of advantage of the discussion and you will be able to do much better than the other investors in this year. If you are new to the channel, please do subscribe and hit the bell icon so that you get all the notifications of my latest videos. And if you have not joined our Telegram channel, please do join as we discuss there every day the market analysis and a lot of stock specific views and news. Let's get started. So what's so special about 2022? As you know, markets don't move up in a straight line. There has to be a time of consolidation or a correction. Now there can be two ways in which markets may correct. It could be a price-wise correction or it could be a time-wise correction. So when it's a price-wise correction, we generally call it a market fall or a correction phase. And when it's a time-wise correction, we generally call it a consolidation phase. So most probably this year in 2022, after a big run-up which the market has given in the last couple of years, it could be a year of consolidation. So there may be different factors across the globe due to which the markets may react, or during the consolidation phase we will try to infer that this particular fall or correction which is happening could be due to different international or local reasons, but ultimately the whole sum of the game would be that there could be a little slowdown in the markets and market may remain range bound during this year. In the last couple of years, what happened is, even if some stocks or some companies which did not deserve that kind of a valuation, because of the perception the investors or the markets had of the companies doing extraordinary earnings in the future, because of that kind of a perception, the companies were given such high valuations. So whatever was given extra, the market may choose to remove that extra valuation from the stock prices and the valuations of such stocks may get normalized. So if you have such stocks in your portfolio, you should go through your portfolio immediately, and things which are highly overvalued or the companies which made extraordinary promises and which are not able to deliver according to those promises should be out of your portfolio, or you should cut down your position sizing in that portfolio in this year. At the Nifty level or the index level, you will see that there is not much movement. So the Nifty or the other indices may remain flattish during this year. But still, there will be opportunities for investors to make money. Where will those opportunities be? You will not see much of waves in the ocean, but at the ocean bed, there will be a lot of stock specific opportunities, majorly in the small and mid cap space, where the companies will continue to deliver extraordinary growth and extraordinary earnings, and there you should have your concentration to pick the right stocks and make good money during this year. So overall, you should have a very cautious approach. You should not only check whether the company is good, as well as you should also keep in mind that you are buying that particular stock at a very reasonable valuation during this year. Unlike the last couple of years where the wind was in our favor or the waves were in our favor, this year we will be surfing against the waves. So you should keep in mind that the stock picking or the stock performance, it's not going to be that easy, and your approach also should be a little skeptical while you take any stock positions during this year. So after getting a brief idea of what we are going to talk about in this video, let's jump into the mistakes which you should avoid as investors during the year 2022. The first mistake you should avoid is don't come with the hope of making quick, huge money in 2022. And don't encourage your friends and relatives or anybody or fellow investors that stock market is a place where what has happened in the past, in the last couple of years, is going to happen again in 2022. If you come with such a mindset, you will be depressed or you would be unhappy, thinking that the stock market is not the right place for you and you may choose to go out of the market. So let's be practical. Let's accept the fact that the stock market may move for a couple of years in the upward direction, and for a couple of years it may consolidate and before it takes the next move. So this is going to be that phase, and you should not have very high expectations in your mind for this year 2022. The next mistake investors should avoid in this year is avoid buying on tips. This is a timeless advice which has been given every time, but still when the market was moving up, whatever tips you hear seem to be working out, but that may not happen this year. So when we advise people to buy on dips, they buy on tips. So that you should keep in mind in this year that you should not be taking tips from different brokers or any of your friends, and just based on those tips you should be investing without looking at the fundamentals of those companies. If you try to do such things, you may burn your hands in 2022. The third mistake you should avoid in 2022 is to buy the winners of 2021. The companies or the sectors which have performed extraordinarily well in 2021 or in 2020 may not perform as good as the earlier years in 2022. There may be different sectors or different themes which may arrive in 2022 and beyond. So you should avoid keeping a thought that the same winners will emerge as winners of 2022. The next mistake, which is the fourth mistake you should avoid, is buying without any exit plan. So when you buy something, you should have a thesis in mind that you are buying this company or this business because these are the conditions which are satisfied. And when you are buying that company, you should also make an exit plan that these things, if they happen, I am going to exit this business. Or if the stock price goes beyond a certain level, I'll be extra cautious to understand what's going wrong with the company, and I'll try to find out the reason, and if that particular reason is substantial or major which can affect the company in the long term, then I will be coming out of that company. So you should be clear of your exit plan before buying or before making an entry into any stock. The next mistake you should avoid in this year is buying low quality stocks. So in the bull run, what happens is all the horses as well as the donkeys win in the race, but as long as the waves are in our favor, things work well. But as the waves subside, everything will be crystal clear. The companies which are performing and which are fundamentally good will be clearly visible, and the companies which are just creating an impression or which are low quality stocks will be clearly visible in the market. So when the tide turns, all these stocks which are low quality ones, which will be beaten down to their earlier levels. So you should be sticking to the high quality companies, and buying low quality stocks is a complete no in 2022. The next mistake you should avoid is not tracking your stocks, or you're tracking the stocks and you find that the earnings of those companies are deteriorating, they are coming up with bad quarterly numbers, and the management is not able to justify the reasons for the bad numbers, or you find that the bad performance is not a one-off quarter, and the management is not sure of reviving the numbers in the next quarter itself. So when you see the earnings deteriorating, you should exit that company. You should not wait for that stock to fall and then take a decision of coming out. When you see the earnings deteriorating and you come out early, then you will be easily able to take away the gains on the table, whatever you have accumulated in the last couple of years. The next mistake you should avoid is going on averaging downwards and going on increasing the position size. See, you should have a clear-cut idea in mind that a particular stock will be given this particular position size in your portfolio. Normally, if you are investing in a particular stock, you should limit your position size to about 5 to 10% of your total capital. 10% also when you are very sure of the company's fundamentals as well as the business model, only then you should allocate about 10% of your capital to that portfolio. Generally what happens is when a stock is falling down, it gives you an opportunity to average it, and while averaging, unknowingly you will realize that you have allocated close to 20-25% of your portfolio just because that stock was giving you an opportunity to buy more and it kept on falling. So that is the biggest mistake you would do in 2022. If you keep averaging downwards and you don't keep in mind the position size, you will end up making a huge dent on your portfolio in terms of losses. The next mistake to avoid in this year is absolutely not looking at the charts. Although you could be a fundamental investor, you should have very basic knowledge of technical analysis. At least you should understand basic chart patterns, or you should understand basic moving averages. So whenever you see major breakdowns on the charts, that when I say major breakdown, the easiest way you can understand of a major breakdown is the stock breaking its 200 days exponential moving average. So whenever such thing happens, such an event happens, such a major breakdown happens on a particular stock, it is because of some major reason. So in such a situation, you should get extra cautious. You should try to understand the reason for the fall, and when you understand that, you're sure that the company will start performing better in the next couple of quarters and the earnings will improve, then automatically the stock price will come above those moving averages. So blindly holding on to any position, ignoring major breakdowns on the charts could be a very big mistake you could do in 2022, and you should avoid that mistake in this year. The next mistake you should avoid in this year is getting emotionally connected with stocks. Although we are fundamental investors, we buy and hold companies as we understand the businesses very well, and we get emotionally connected with the companies as you have done so much research about the company and you plan to buy it like Warren Buffett for holding it forever. Having a thought that you should hold it forever is good, but holding it forever comes with a particular set of conditions. The holding it forever holds good only when the original thesis for which you have purchased that stock holds well and the earnings of the company continue to do well. So when your thesis is broken or the company is not performing well in the quarterly results, then getting emotionally connected with the company and keeping in mind that this I am going to hold this for the next 5 years or 10 years would be a totally wrong approach, and you will end up losing your original capital also. So getting emotionally attached with the stocks is a complete no for 2022. The last mistake we should avoid in this year is investing in the stock market or trading in the stock market without having your own rule book or with your own set of rules. You should, based on your experience, by reading the books or by listening to others who are teaching you about the stock market, ultimately decide a plan of action, like these are the rules by which, or these are the conditions in which I'm going to buy the stocks, these are the conditions in which I'm going to sell the stocks. So without having your own framework, if you invest in the stock market, whether in this year or any year, there is a huge chance that you will end up losing money. So before you invest in this year, you should prepare your set of rules. And if you're already invested in the stock market, at least now you should realize that you should have your own set of rules and you have to prepare your own framework, and you should follow that framework and get out of the stocks, the non-performing stocks, in 2022 as soon as possible to conserve your capital. So these are the 10 things you should keep in mind and avoid these mistakes in 2022. I am not being pessimistic. I am very optimistic about the market, and I'm sure that in spite of the market being sideways in this year, we will be able to spot good opportunities and will be able to make decent money in 2022 also. So keep these things in mind while you invest in 2022, and I'm sure that you will come out of this year with fruitful results. If you like these things which we have discussed in this video, do share it with your friends so that they become well aware, or even if they already know, that they will have a recollection in their mind that they should keep these things in their memory while investing in this year. So thank you for watching this video. If you like this video, hit the like button and subscribe to the channel. If you want me to make more interesting videos like these kind of topics, do comment the name of the topic or your suggestions in the comments so that I can read it and make more such videos where I'll be able to educate you people with practical experiences, practical situations, and help and guide you what to do in such situations to grow your capital and manage your risk very well. So thank you for watching and have a wonderful day.